good morning and thank you for tuning in to ET Now's Buy Now, Sell Now with me, Adiraj Singh and Vinny Motiwala. Vinny, it's my favorite day. Friday is finally here. I hope the markets are as jolly as we are.
Not as jolly as we are, but yes, Sensex is at, trading a bit in the red, down almost 0.2% in trade as of now. Still holding on to about the 18,000 mark as of now is the Nifty, while the Sensex is somewhere around the 60,680 levels. So keeping an eye on that, mid-cap space is performing in tandem with the benchmark indices, but the smaller end, the smaller cap space is actually doing much better, trading in the green up to 0.1% in trade. Among the gainers, we have in the Nifty 50, Bajaj Finserv, Ultratech Cement, which are doing quite well in trade, while Hero MotoCorp, BPCL are among the top losers. Sector-wise, when you look at the sectors which are not performing today in trade, is Nifty IT and Pharma among the top laggards, while metals surely shining in trade today. But let's talk about one stock, Pratap Snacks. Now, Pratap Snacks reported its numbers for Q2 FY23. Margins seem to be a bit under pressure coming in. Revenues have seen a strong growth this time around as well. Let's bring on aboard the MD and CEO of Pratap Snacks, Mr. Amit Kumat. Thank you so much, sir, for joining in with us this morning on Buy Now, Sell Now. It's a pleasure having you on the show. Sir, firstly, I want to start with obviously talking about the revenues, which have seen a strong growth this time around. But, could you just give us an understanding on how much of this growth was actually a pricing-led growth and how much was a volume-led growth in this revenue growth?
I think for us, the pricing, the volume and the prices are almost same. So there is no difference between value and volume. So it's 100% value and volume-driven growth.
Okay. 100% volume and value-driven growth is what you're saying. But, okay, what about the margins then? Margins have been under pressure even this quarter you're seeing. So how much of the impact was due to inflation, and do you see the margins actually continuing to be under pressure even in Q3 going forward? What is your expectation?
So if you see the margins from the last quarter, they have improved drastically. We were at minus 0.5% EBITDA last quarter, which has improved to almost 5%. But if you compare from the last year, the margins are a little bit down only because of the inflationary pressure. The total inflation from last quarter to this quarter is almost 6.5%, out of which we are almost able to mitigate 5% out of that. So the margin downfall is only 1.7%. But going forward, we definitely see margin improvement and hoping to get to double-digit EBITDA in next 2 to 3 quarters time.
Double-digit EBITDA in the next 2 to 3 quarters is what we're watching out for. Sir, one more thing I do want to understand. Any price hikes that furthermore you will be taking going forward? How much of the raw material cost increase have you actually passed on so far? If you could give us an understanding on that.
So we don't intend to increase the prices for now. We don't pass on the pricing, increase in price to the consumer right now. We are trying to basically optimize our production cost, optimize our channel margin. Most of the benefits which we have taken from last year to this year has come out of the channel reduction and very little from the price increase to the consumer. And going forward, also we want to intend to do the same thing. We don't want to increase the pricing.
And what about in terms of, are consumers actually shopping more for smaller packets? Any sort of down trading that you have seen coming in? And how was the sales of the smaller packets actually? Has that increased significantly?
No, we are always at 85 to 90% of the smaller pack sales. But for us, there is an increase of almost 30% sales increase of the bigger packs. But still, the number is not very significant.
I remember a couple of quarters back, you had spoken about, the company wants to reduce that contribution which you have from that ₹5 pack. Like you mentioned, 85 to 90%, comes in for these smaller packs. So, that contribution, how do you plan on actually changing it? Has that significantly, how will you be shifting towards the larger packs then?
The target is to go to probably 25 to 30% in next 2 years' time. So the sales of the higher packet increased by almost 30% in our last 2 quarters. But still the numbers are not that significant. Probably from 90% we would be close to 85% as of today for the smaller pack.
Okay, thank you so much, Mr. Amit Kumar, for joining with us this morning and giving us an understanding on what we should be expecting from the company going forward as well. That was the management of Pratap Snacks for y'all. But obviously, today is Friday. It's Adaraj's favorite day. But surely we have Kunal, who is, as always, every Friday, taking us through some interesting charts, patterns, technical terms that we should be keeping an eye out on. And Kunal, today, what is the interesting candlestick pattern that you're going to teach us?
Thank you, Vinny, for that. So today's discussion on Pathshala is on bullish engulfing pattern. Now, it's a candlestick pattern which holds a lot of prominence for traders who are looking out for strong reversals on the chart. So the topic is bullish engulfing candlestick pattern today. We'll go with the first basic theme of what a bullish engulfing pattern is all about. So we'll go into the first slide where we look out for a basic trend, on the charts. This is the trend on the stock price. For example, this is Nifty Financial Services Index. What happens in a bullish engulfing pattern is basically the stock gets into a downward trend, and all of a sudden you see a sharp reversal in terms of this kind of a candlestick pattern. Now the body of the candlestick pattern engulfs the body of the previous candlestick pattern. In fact, this is a much more strong and a prominent bullish engulfing pattern, where we've seen the body of the entire green candle engulfing the entire candlestick which has been present, both from the body front as well as from the shadows perspective. Now these are the points where we see that the stock finds a very strong bottom and the bull force comes back again. That's where we expect the stock prices to get into a rally phase and goes into a correction. We'll go into the next slide as well as a very similar kind of a chart. This is for the Nifty Metal Index, very recently in 2021 on the weekly time frame. As you can see that 3 weeks on a trot, the Nifty Metal Index had fallen from 3,550 approximately to almost 3,000. That's a correction of almost 15% in a very short span of time. What happened post that was a bullish engulfing pattern where this candlestick pattern managed to engulf not just the previous one but even the previous two strong weekly sell-offs. That was a strong indication that the trends are have reversed, and this could be a point where we expect the momentum to come back again into the metal index. And look at this, post the breakout which had happened, the index had started to move up significantly higher. So that's the importance of a bullish engulfing pattern. It's a strong chart pattern which helps us indicate that possibly the stock price is getting into a reversal.
Right. Many thanks, Kunal. That was Kunal's educative Pathshala that we embark every Friday on Buy Now, Sell Now. But stay with us, viewers. We're slipping into a short break. You start sending us your queries, because the moment we come back, we start with the queries. We'll be right back.
Co-powered by
Rakesh Junwala wants to go easy on trading. He does not want to trade as aggressively as he did, let's say, couple of years ago.
I always used to, I have felt that for the last 25 years. कि क्या करो अभी छोड़ दो ट्रेडिंग में, वो छुट्टी नहीं.
Once a trader, always a trader. Rakesh Junwala is a very quick decision maker. Some of our common friends tell me that you take a decision to invest millions in 10 minutes. You don't take hours, you take minutes. How does it work?
You got to catch the vital points. And second thing, remember, you I want analysis paralysis. You're investing in a future which is uncertain. You cannot predict it beyond a point.
All leaders in individual sectors.
What's the sense that you're getting on volume growth? Just clarify this entire case. What is it going to mean for the business? What else are you looking at?
It was clearly one of the biggest deals.
Here, ET now have been getting you bit by bit.
The voice that instills trust.
My experience, based on what I've done in the last 20 years, these are the times where you don't panic, and if you stay committed to your financial planning, you'll be rewarded. The bulls are saying, look, this is markets which are telling you that the future will be much brighter than what the past was.
The voice that commands respect.
You should remember that every bull market is higher than the last one.
The voice that is always ahead of the curve.
Maybe later this summer, I'll buy more gold and silver.
Domestic is already at 60% capacity and going towards 80%. But we need more growth in international.
The voice that does not falter.
How do you convert this crisis into an opportunity? We will become stronger. We will survive this storm. With each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
Catch India's most experienced market anchor, Nikunj Dalmia, only on ET Now.
The rupee depreciation is only helping further than the seller of that commodity in India benefits.
Speculation is as old as the hill. We started off the correction with the scare of interest rates rising.
I don't think the sanctions go away within a couple of weeks. They will stay for some more time.
For anybody who has a 3 years time frame, I think next 6 months would give good entry points.
I think from a medium to long-term perspective, I think we should still be fine even from here.
Now things are exactly as what you had shared with us. We are staring at India like never before.
Absolutely. And people are not realizing it. I wish every Indian felt that. But time is that नास्तिक है उसको आस्तिक मत बना, समय बना देगा.
For an SIP investor, next 2-3 years, is there a probability and a possibility of a double-digit return?
And although difficult to predict, return will be more than 10 times.
Welcome back, and you're watching Buy Now Sell Now on ET Now. And before we start with your queries, it's important for an investor to know how to protect themselves. There's always ups and downs coming in the markets. Let's bring on board Ashish Maheshwari, who's joining in with us this morning as well. Ashish, a very good morning to you. And how should an investor look to protect themselves? Volatility, ups and downs. What should one be doing to be safe in the market then?
See, first of all, we need to define that who are you? You are an investor, or you have become a trader, or you are just doing jobbing, or you're doing some arbitrage, what business you are into. So if you are a trader, the best part is that you need to first of all define that you want to trade for a day or a trade for 3 days, or you would like to have a positional call. First and foremost for trader is always keep a stop loss, because if you will not keep a stop loss, then you from trader you will become investor in no time. So my suggestion will be those aspiring traders maintain some discipline of investing as such, and maintain a stop loss as well as maintain a target of your profit booking also, because a market will always fluctuate and give an opportunity to buy anything at a lower price also. So if you are getting some profits of that table, I don't know, even the same day, you should take profit and even start trading for the next day. As far as investors are concerned, I think you need to have a nerve on the market, which sectors are getting more momentum, or which sectors are still subdued and can perform better. Suppose like if you invest in today's market, like more inclination of investors should be towards railway, towards power, defense, cement, which are more India-centric themes, and where you can make more money compared to your ITs, FMCGs, and pharma, etc. So this is the way I think investor can make money from the market.
Right, Ashish. Thank you so much for that. But let's get started with all your stock-related queries. You can send us your queries either on YouTube, WhatsApp, or Twitter as well. And let me start with the first query then. Kunal, first one is for you. We have Jai Krishnan from Kerala, who's asking, what is going to be a better option for the November monthly expiry, whether it's a bank Nifty call or a put option. What should they be looking at?
I'll route for bank Nifty call option. I think that's a much more better prospect given the kind of recovery we've seen for many of the banking names, large caps, PSUs, mid-cap PSUs, mid-cap private sector banks, etc. So my inclination would be heading towards a breakout on the upside. The only concern is that 41,500 mark. That's been a major resistance for the banking index. So if you can probably buy a call option at that breakout point, or just above the breakout point of 41,500, I think the timing would be far more better. So I think that's what I would be looking out for.
Right. Coming back to you, Kunal. M. Matavani is writing to us from Chennai. He's holding 80 shares of Zenza Technology at the rate of 380 and Castrol 150 shares at 170. What would you have him do?
For Castrol, you can continue to hold on. I think the stock is getting back into shape. It's recovered quite okay from the June lows, 100 from 100 to 124, but a long distance away from its all-time high levels. Still, I think it's I think the all-time high levels was 250 odd for Castrol, so it's a long distance away from that. I would recommend hold on Castrol. For the other name which you mentioned, I would recommend Zensar Tech that you exit the stock and look out for more large cap names on the IT pack. I think time and again I've been recommending the likes of HCL Tech, Infosys, and TCS as more preferred bets given the kind of scenario we are seeing on the IT stocks.
Okay. Ashish, this next one is coming in on the recent listed company, that is Rainbow. Now, Manish Raju is holding 150 shares of Rainbow at 545 rupees per share. The stock is surely making new highs, is what they're saying, but could you tell us how much more upside can we actually expect from this one, and should they be looking at booking profits or continue to hold this one then?
Decent gains are being made in this listing, and in my view, the market cap has also touched almost 10,000 crore. So stock is priced in my view, but as the momentum is there in the stock, so you can continue to remain invested for some more time, and can keep a stop loss of 775 or a target of 850, whichever comes first, then you can exit. But in my view, valuations are like fully right.
Right. Swaminathan from Chennai is writing. He wanted to know if he can invest more on Rainbow Children because he says the stock is going high every week. Kunal, would you like to take that?
I don't track the stock, so I'll probably skip this one.
Right.
Okay. Then let me move on to the next one. And, Ashish, coming to you, we have a query. This is from Rajesh from Indore. This query is on Lakshmi Machine Works. And how do you see this stock as a long to mid-term investment perspective? Would you advise one to enter the stock?
See, this again textile manufacturing company per se, but in my view, at present we are not seeing any major momentum which is building up in textile stocks, because the reason is textile is more unbranded textile is more towards the export market, and their situation is quite bad as far as Europe and US markets are concerned. So whatever the aggressive expansion plans were there for textile companies may slightly take a backseat, and because of that, again, order flows which were going to LMW may also not be that aggressive. Only solace is now a lot of Indian companies, instead of buying Chinese machinery or German machinery, they are trying to broker more from Indian manufacturers for their expansion plan. But still, in my view, the kind of the growth we have seen in past in LMW may not be there in coming time. So my suggestion is to avoid this. Instead of this, better to look at more textile direct play like Raymond, which has come out with extremely good numbers, as well as Vedant Fashion kind of stocks, which will continue to deliver a robust set of numbers in even coming quarters.
Very good morning, Ashish Adhiraj here. Coming to you now, Chandra Moli is writing to us from Chennai. He's holding 70,000 stocks of BHEL with an average of 67. He's saying now it's crossed the 75, 76 level. Should he wait more to book out or book profits now?
So my suggestion will be to remain invested. In fact, those investors who missed the BHEL rally, still you have time to accumulate, because I see this stock going into the 3-digit territory. Again, the rationales are last quarterly numbers were bad for the company, but again, this quarter onwards, I am expecting from losses, they will be in profit once again. And the kind of momentum is there in the capital goods segment. BHL will perform good for at least next couple of years. So in spite of the stock being in ban in F&O, we have seen continuous delivery buying from foreign institutional investors in BHEL. And the way now L&T, Cummins, all these stocks are moving up, BHL is quite underpriced and even should be accumulated at 75 levels.
We have Sita who wants to know the view on Tata Steel. Target price actually for a short term and a long term. What should we be looking at?
See, short term wise, I would suggest to hold on to the stock. It's not as if that the stock is getting into any major kind of a momentum, but then it's also not falling, below the major supports of 97, 96 for Tata Steel over the short term. Now, the long term charts would probably get better for Tata Steel once it breaks past about the 110 mark, which is also the 200 DMA. The best part is that most of the other metal names like JSPL, JSW Steel, I think Vedanta as well as SAIL, if I'm not wrong, is also on the verge of a breakout of 200 moving average. So when the setup is quite strong from the entire metal pack, it would just be a matter of time that even Tata Steel would probably break past about the 200 DMA. So the bigger targets would probably unfold about the 110 mark. I would suggest to hold on as of now.
Right. Kunal, coming to you now. 145 shares of Bank of Baroda at 88. It's been a year. Should he book profits or hold it further? Also, which stock should he invest in? This is Abhimanyu Kohli from New Delhi asking a question for you, Kunal.
So I would suggest to hold on to Bank of Baroda at least as of now. I think the PSU banking rally has just started to get into a second leg mode for itself. Bank of Baroda, I think if I'm not wrong, is also one of the best performers from the PSU banking name in the last 5-6 months of this huge rally which you've seen for the PSU banking stock. So I think it makes a lot of sense to hold on to the stock. What you can ideally do is, since you've bought at levels of 88 and the stock is almost at 150, you can probably trail your stop losses significantly higher. So maybe 135, 138 could be a stop loss which you can trail up to. And as now the stock keeps on making new high, you can keep on trailing the stop loss higher and ride the uptrend.
Okay. Rajagopalan has a query coming in on Transport Corporation of India, Ashish, and wants to know whether it's a good time to buy this stock at current levels. They are ready to hold it for a period of 2 to 3 years.
See, logistics as a sector, I'm not too excited as such, because it's a sector where you have fancy for few days in a month, then it goes in hibernation. So in market, I see plenty of other opportunities in other sector. Why to go for that kind of stocks or the sector which are quite seasonal? So my suggestion will be to avoid Transport Corporation of India. Instead, I'll suggest you buy Railtel stock or rights stock as in railway sector, because this is a sector where a lot of institutional investors are chasing now because of monopoly kind of nature of business, and continuously they are building up their order book, be it rights or Railtel. So you can pick any of this and invest there. I see 20% kind of upside both in Railtel and rights in even next 3 months.
Right. Ashish and Kunal, stay with us. As on that note, we slip into a quick break, but don't go anywhere. We come back with the queries and the rapid fire. So viewers, keep your questions coming.
आग को फैलने से रोकना।
See, Nikunj, you are a very seasoned market observer, and therefore you may hit the nail on the head.
I think you have always kept the focus on the retail investor, and I think it's again a very apt, very good question.
Nikunj, first of all, thank you so much. You are one person I've always enjoyed interacting throughout last 15-20 years.
You know, the problem on coming on your channel is that you already know everything. I just heard your introduction. And what can anybody add to that?
It's not always about buy, sell or profit loss.
So after a gap down start, there is no buying.
It's about making you market ready with insights from the foremost market anchors.
Stocks open sharply.
The Nifty
higher.
Bank Index is
Buying
down
momentum has in fact come into the market.
And the views from top-notch technical analysts. Join them talking business, markets and earnings every trading day from 8 a.m. to 4 p.m. only on ET Now.
It's a daily grind that gets me going. Beating myself over the details. The tiny bits, the nuggets you tuck away. Somewhere you spot smoke and you look for the fire. At the end of the day, you don't want the froth. You want to skim the foam. And get your caffeine kick in a way that it hits that sweet spot. Yeah, just like a good cup of coffee. A real story with all the right elements that connects all the dots does not come in an instant. I'm Vikram Oza. Join me on ET Now.
Start your trading day with non-stop updates and uninterrupted trading ideas to power up your portfolio with unmatched experience and analysis from our market experts.
In the market, right here on ET Now.
Markets are trying to make a comeback. It's a smart start.
Sensex is up more than 400 points.
Management is now with us. Is it overvaluation case?
See that 17K.
Watch the opening show from 8 a.m. to 10 a.m. ET Now. Break free.
When you are India's most experienced market anchor, you don't just ask the right questions, you make statements.
With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money. If the normalization in the world will happen, demand, which in a sense got destroyed, will automatically make a comeback.
When you believe in India's growth story, you will be known for your acumen.
For long-haul FII, who looks at India as still a promised land for a consumption and for a growth revival destination, that pretty much is in the game. This crisis has surprised, I would say delighted, and has given birth to a new cult culture, both locally and globally.
Nikunj Dalmia, only on ET Now.
Hello and welcome. You're watching Markets at Noon. Midway through the trading day, we help you catch all the trading action
and get the bigger picture of the equity markets.
We help you screen through all the clutter and get you research insights.
master the market sentiment during the most active trading hour of the day.
Get exceptional winning strategies from our technical analysts as well as expert views coming in from the market makers. Catch markets at noon every trading day only on ET Now.
Rakesh Junwala wants to go easy on trading. He does not want to trade as aggressively as he did, let's say, couple
But
of
I
years ago.
always used to, I have felt that for the last 25 years. कि क्या करो अभी छोड़ दो ट्रेडिंग में वो छुट्टी नहीं.
Once a trader, always a trader. Rakesh Junwala is a very quick decision maker. Some of our common friends tell me that you take a
Welcome back, and you're watching Buy Now Sell Now on ET Now. Let's talk about Raymond. The company reported its numbers yesterday. Seems like a decent set of numbers coming in from the company. To talk more about the numbers, we have Amit Agarwal, Group CFO of the company, joining in with us. Firstly, very good morning, Amit, to you. And I want to just directly start and jump right in. Earlier in your interactions with us, you mentioned that FY23 was going to be a record year for Raymond. And indeed, when you look at the Q2 numbers, has turned out to be the fourth consecutive quarter for a record revenue for the company. Now, would this momentum actually continue going ahead, and will you be able to cross that 7,000 crore mark comfortably in FY23?
So look, I don't want to get into the guidance. First of all, let me tell you that our performance, which is quite a stellar performance, if you have seen in the second quarter, because we have been expecting this good, strong festive season with the onset of the wedding season starting in November, December, and then actually the fourth quarter seems to be also very good in terms of the number of dates of weddings. I believe we have got almost 43 days of wedding dates, muhurats in the fourth quarter. So that should propel the demand. However, we have to also understand a little bit that the way the K curve is building up in the country, that people who would just go out and shop a little bit on the streets, they may be a little cautious. However, we are seeing a big weddings purchases to happen. And I think that is one big sort of an expectation from us. Similarly, on the real estate side, you have seen that our project has been doing very, very well at Thane. And we have got some phenomenal bookings. And we see that the real estate market should continue to deliver strong bookings for us on a go-forward basis. And as you know, that we have already announced almost 18 months back that we will be delivering our first set of apartments 2 years ahead of RERA in December 2022. So that should also help us to improve the performance of that business.
Right. Another important question would also to be the profitability that the company is also at a record high. Margins have risen consistently in the last few quarters. What is the company doing differently versus its peers? And when will the company achieve the target of 17 to 18% margin levels?
So look, if you look at it, in terms of a margin improvement, we have delivered more than 400 basis points of improvement in the margins over the last year. And simple few things which we did is we have moved away from a recovery mode to a growth mode. So that's, if it is very clearly reflected in the revenues, and across our businesses, if you see, we have seen a double-digit growth. Be it the suitings business, be it the apparel business, which is a strong foothold with the launch of the ethnics, and on the real estate business. Now, as far as the margin improvement, we were very tight on the cost consciousness. As we talked about, compared to the pre-COVID level, we have substantially reduced on a sustainable basis 350 to 400 crores of OPEX cost. And obviously, you can't see in the absolute terms when there was 40% growth in the revenues and 15% compared to the pre-COVID levels increase in the revenues. But also you have to provide for some inflation. But we see that the current level of OPEX is giving us, after incorporating the impact of the inflation, a decent 400 crores impact. And if I look at OPEX cost as percentage of sales, we have dropped by almost 600 basis points. So that also helps us in improving the profitability.
So you did mention that you plan to be net debt free by FY25. Now net debt has declined to around 1,286 crores from 1,300 crores sequentially. With the unlocking of the engineering business and the real estate business, would you be able to achieve this target sooner than you have mentioned?
So look, as we talked about, I think the FY25, the target which we have given is based on the cash flow generation from the business. And you see there is a healthy cash flow generation from the business. You know, the way the business, seasonality of the business is that the first half of the year, you supply the material to the retail network, to the distributor network, to the wholesaler network for the wedding and the festival season. So you will have a higher working capital deployment in the first half, and the working capital starts to reduce, which will release the cash and which will actually go towards a debt reduction. And that has been very clearly reflected, that we have been very focused in terms of a debt reduction from a cash flow from operations. And with that, we feel very confident the way our businesses are growing with a strong record performance coming quarter after quarter. I think we are very, very confident that by FY25, we should be a net debt-free company. And anything, for example, an offer for sale for the engineering business would further boost the liquidity and help us to deleverage the balance sheet sooner than later.
Right, and before we let you go, the real estate business, of course, has seen the most stellar growth amongst all segments. It also happens to be the highest EBITDA margin among all your businesses. My question here is, what is the growth potential you see here, and what % of your top line and bottom line could this business contribute going ahead?
Sure. So look, as we talked about that, we have got 2 projects running at the Thane land, which we own, and that project is delivering phenomenal. If we talk about, as we speak today, we have got almost 85% of the total launched inventory is already booked out. So the sales velocity is phenomenal. Then on top of it, the construction pace, which I touched upon earlier, that we are delivering the apartments 2 years ahead of VEDA. So I think both put together has given us a strong impetus in terms of delivering a strong revenue, which is close to 250 crores with a 25% margin. And I think we have already expanded ourselves. As you know, that we have signed one JDA project, which is in the process of getting final approvals, which we should be launching in the next few months. So that is the way for the growth for the real estate business, that we continue to boost our Thane, exploit the Thane land, as well as take the JDA route in order to expand that business. So we see to have a very, very good confidence on the real estate business. We have built a 200-member team. So now there is really a strong way forward for the real estate business.
Thank you so much, Amit, for joining with us this morning on Buy Now Sell Now, giving us an understanding of Raymond's growth and story going forward as well. But let's move on and keep it going actually with the query segment. And Ashish, coming with you with the next query. This one we have is coming in for Grindwell, Norton, and a long-term view is what Indumati wants on this, holding since 1700 levels. What is the view on this one?
Okay, so already you are in the money by 300 odd rupees, and the blue chip company doing pretty well also. So my suggestion will be to remain invested here and exit at 2,200 kind of.
Right. Kunal, coming to you. Manikandan is writing to us from Kerala, bought Mananapuram and a lot of Hindalco, 420 at November. What he's saying, what he should do next, book profits or sell?
So I'm assuming that both of them are cash positions for November series or rather future positions for November series. In both the cases, I would believe that you should hold on to the stocks, both the names. So I think Manappuram is also trying to make a good comeback. Manappuram Finance, Muthoot Finance, they've made a strong comeback from their 2-month lows, and I think the recovery seems to be on par for these stocks to gain more momentum from here on. So at least the stock can come back to your cost price, which is about the 110.11 mark for Manappuram Finance, and for The other name also which you mentioned, Hindalco, I think 420 seems to be a good price, but the stock seems to be pivoting around. As I said earlier, that most of the metal names are gaining signs of strength, so you should hold on to Hindalco.
Okay, hold on to Hindalco, but hold on with us as well, viewers, because we have one more management lined up, that is Indian Bank, and this is also on the back of its numbers. We have the MD and CEO Shanti Lal Jain joining in with us as well. Firstly, very good morning to you as well, and let me dive right in. Your net profits have grown by 12%. How much of the contribution has come actually due to the core business and NII, Mr. Jain?
So main contributor this time is a growth in net interest income and growth in other income other than the treasury, and asset quality will remain under control. So if I say in the business side, our credit has grown by 14%. Under 14%, retail has grown by 14%, MSME has grown by 15%, and MSME has grown by 9%, and agri has grown by 15%. As a result, our RAM has grown by 13%, corporate has grown by 6%. So, and deposit has grown by 7%, and we maintained our CASA at 41%, and the CD ratio has improved from 70 to 74%. So in the backup, strong business growth, keeping prices under check, cost of deposit under check, and asset quality under control, we have performed reasonably well.
Right. A very good morning, Mr. Jain. This is Adira joining in. And a question we'd also like to ask you is, now what has been the reason for 14% growth in other incomes? And could you also please detail the segments?
Fee-based income has grown by 18%. Fee-based income, LC guarantees, processing fees, digitization fees, and second one is our forex income has grown, or PSLC sale income has grown, and our recovery in return off has increased. So because of this, there is a growth in other income.
Right. Mr. Jain, some of the sectors like auto loans has shown a 28% rise this quarter. What is the overall credit target for FY23?
Yeah, we think that the growths are sustainable, the way growth is happening, the way people are buying automobiles and all. So, and the way jail loan is increasing, the way housing loan is increasing, you see, even the housing prices have increased, and still there is a huge demand. So we are hopeful that the current growth will continue. So far we have grown around 14% in a credit. So we expect that we will be able to grow around 12% plus minus 2% in the next 6 months of the financial year as well.
Right, Mr. Jain. Now, subsequently, there have been 100 BPS growth in the NIMs to 3.2%. Is it sustainable?
3.10% was June, 3.20% in September. But what happens in the increasing interest scenario, but your income start increasing on your advances, especially in a repo link advance, and therefore there is a increase in the interest income. So slowly what is happening, the deposit cost is also increasing. So rate on deposit we are increasing up, and it is impacting increase in our MCLR. So we are hopeful that we should be able to maintain the margin of around 3% per year as a whole.
And how much of your recovery target of rupees 8,000 crore is achieved in this quarter? Have you actually shortlisted account for the NARCL?
So point is that we have targeted 8,000 crore of a recovery, 2,000 crore per quarter. This is what we targeted initially. So is against the 8,000 crore year as a whole, or a 4,000 for a half year, we are at around 4,400 some odd crore, so which is 55%. So in a recovery in a 6 months, we are 55% of the target. Likewise, in AUC recovery of the PWO recovery also, we are at 55% target. So we are hopeful that we will be able to achieve this 8,000 crore of a number. And this quarter recovery is small because we have done more compromises. And going forward, the recovery should be more from the NARCL asset and the IBC processes. And as far as NARCL is concerned, so around 21 of our accounts, they have shown interest. So in a four account, they have given us an offer also. Remaining accounts are in the various stages of due diligence. So maybe in this quarter, in the 4 account, we should get someone.
Okay, Mr. Jain, thank you so much for joining in with us this morning and talking about what should we be expecting from Indian Bank going forward. But let's continue with the query segment. Kunal, this query is coming in from Dheeraj, I believe, and this one is on Tata Motors DVR. Is it a good time to look at this stock?
Well, I think closer to 220 could be a good point to buy the stock, because that would mean that the stock would come back towards the mean reversion or the 200 DMA for itself. It would also probably mean that the stock would come back towards the midpoint of the big trading range the stock has been. So I think 190 to 50 has been the huge trading range for Tata Motors DVR. Closer to 220 is what I would recommend to buy on Tata Motors DVR.
Right. Trying to establish a connection with Ashish. Kunal, this one's for you again. Sandeep is writing to us from Tripura in Tripura. He's looking to invest in the chemical sector, and he's asking which stocks look attractive now for a 2 to 3 year horizon.
So I think Tata Chemicals is looking attractive. I think from the other space, I think Deepak Nitrate is looking also extremely attractive. We've discussed the stock quite often on this show as well. So that's one stock which you can look out for from a longer term play. Even the likes of Naveen, Fluorine and Alkylamine, I think these stocks on a more medium to long term basis look fairly attractive. These stocks I think have already gone through a phase or a patch of correction for themselves. So you can pick and choose these names. Deepak Nitrate, Tata Chemicals would be the preferred stocks from my list.
Ashish, we have a query coming in on UCO Bank. This one is from Sunita. She wants to know, is it the right time to enter UCO Bank for a long term?
Yeah, surely you can enter it post their yesterday's number. I think bank is doing now quite well and on the path of recovery and growth both. So my immediate target for the bank will be around 17 rupees, but going forward even it can go to 20 rupees also. So UCO Bank looks good to enter at today's price point also.
On that note, we're going to slip into... Okay, actually we do have to go across to the Global Investor Meet 2022. There are good speakers, there are big speakers talking over there. Let's go across and listen in.
And the rest of Asia, and I think that's the future. Thanks. JC, if I were to come to you, nothing exemplifies concentration of an industry in few geographies as your industry. Semiconductors, like TSMC, South Korea and Japan. If you look at these three places, they probably constitute lion's share of the production of semiconductors around the world, if you include China. Now, can you share with us how did this happen? Why did the semiconductor industry concentrate in that part of the world? Although the technology came from the United States. From the beginning, the technology has always been from the United States and Europe. Why did manufacturing concentrate in that part of the world?
Yeah, first of all, good morning everyone, and thanks for this opportunity. I will answer it a little bit differently. What is actually now transpiring? It may have happened for maybe the cost reasons. It may have happened because everybody was trying to get the best product and through a concentrated effort and so on. But if you really look at it, there are few trends that are going on that I think right now we should pay attention to versus what may have transpired in the past. And few of them, I think they are very obvious, but I will just simplify it for all of us. One is, I think the demand for the electronics and the semiconductors continues to rise, and it is driven by a lot of technology that is required for automation, for consumer electronics, for the new technologies that are pushing it, like the 5Gs and AIs and so on and so forth. I think that trend which started maybe 5-7 years back will continue. You can always say, yeah, there is a little bit of a slowdown that is happening, but that is cyclic. It happens in this industry all the time. So the trend of more and more
Do we have to wait years?
Decision to invest millions in 10 minutes, you don't take hours, you take minutes. How does it work?
You got to catch the vital points. And second thing, remember I want analysis paralysis. You're investing in a future which is uncertain. You cannot predict it beyond a point.
In individual sectors.
What's the sense that you're getting on volume growth? Just clarify this entire case. What is it going to mean for the business? What else are you looking at?
It was clearly one of the biggest deals.
ET now have been getting you bit by bit.
The voice that instills trust.
My experience, based on what I've done in the last 20 years, these are the times where you don't panic, and if you stay committed to your financial planning, you'll be rewarded. The bulls are saying, look, this is markets which are telling you that the future will be much brighter than what the past was.
The voice that commands respect.
You should remember that every bull market is higher than the last one.
The voice that is always ahead of the curve.
Maybe later this summer, I'll buy more gold and silver.
Domestic is already at 60% capacity and going towards 80%. But we need more growth in international.
The voice that does not falter.
How do you convert this crisis into an opportunity? We will become stronger. We will survive this storm. With each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
Catch India's most experienced market anchor, Nikunj Dalmia, only on ET Now.
The rupee depreciation is only helping further that the seller of that commodity in India benefits.
Speculation is as old as the hill. We started off the correction with the scare of interest rates rising.
I don't think the sanctions go away within a couple of weeks. They will stay for some more time.
For anybody who has a 3 years time frame, I think next 6 months would give good entry points.
I think from a medium to long-term perspective, I think we should still be fine even from here.
Now things are exactly as what you had shared with us. We are staring at India like never before.
Absolutely. And people are not realizing it. I wish every Indian felt that. But time is that नास्तिक है उसको आस्तिक मत बनाओ, समय बना देगा.
For an SIP investor, next 2-3 years, is there a probability and a possibility of a double-digit return?
And although difficult to predict, return will be more than 10 lakh.
Nikunj, you are a very seasoned market observer, and therefore you may hit the nail on the head.
I think you have always kept the focus on the retail investor, and I think it's again a very apt, very good question.
Nikunj, first of all, thank you so much. You are one person I've always enjoyed interacting throughout last 15-20 years.
Welcome back, and you're watching Buy Now Sell Now on ET Now. Like you can see on your screens, Nifty just moved up from the lowest levels of the day, but still holding on to the 18,000 mark and above the 18,000 mark, while Sensex somewhere around the 60,700 levels. Mid-cap space performing a bit weaker than the benchmark indices, while a small cap is holding on to some gains, up 0.3% in trade as of now. Stock losers, Hero MotoCorp, Infosys, BPCL, HDFC Life among the top losers in the Nifty 50, while top gainers we have Bajaj Finserv shining in trade, and Ultratech Cement up more than 3% as well. But with that, we are absolutely out of time on this edition of Buy Now Sell Now. Thank you so much from myself, Aduraj, as well as the team who put the show together. Don't go anywhere. Markets at noon will take the action forward.
The problem on coming on your channel is that you already know everything. I just heard your introduction. And what can anybody add to that?
It's not always about buy, sell or profit loss.
So after a gap down start, there is no buying.
It's about making you market ready with insights from the foremost market anchors.
Stocks open sharply.
The Nifty Bank Index is
buying
down
momentum has in fact come into the market.
And the views from top-notch technical analysts. Join them talking business, markets and earnings every trading day from 8 a.m. to 4 p.m. only on ET Now.
It's a daily grind that gets me going. Beating myself over the details. The tiny bits, the nuggets you tuck away. Somewhere you spot smoke and you look for the fire. At the end of the day, you don't want the froth. You want to skim the foam. And get your caffeine kick in a way that it hits that sweet spot. Yeah, just like a good cup of coffee. A real story with all the right elements that connects all the dots does not come in an instant. I'm Vikram Oza. Join me on ET Now.
Start your trading day with non-stop updates and uninterrupted trading ideas to power up your portfolio with unmatched experience and analysis from our market experts.
In the market, right here in ET Now.
Markets are trying to make a comeback. It's a smart start.
Sensex is up more than 400 points.
Management is now with us. Overvaluation case.
See that 17K.
Watch the opening show from 8 a.m. to 10 a.m. ET Now. Break free. When you are India's most experienced market anchor, you don't just ask the right questions, you make statements.
With each passing day, this market is becoming better. And with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money. If the normalization in the world will happen, demand which in a sense got destroyed will automatically make a comeback.
When you believe in India's growth story, you will be known for your acumen.
For long-haul FII who looks at India as still a promised land for a consumption and for a growth revival destination, that pretty much is in the game. This crisis has surprised, I would say delighted, and has given birth to a new cult culture, both locally and globally.
Nikunj Dalmia, only on ET Now.
Hello and welcome. You're watching Markets at Noon. Midway through the trading day, we help you catch all the trading action
and get the bigger picture of the equity markets.
We help you screen through all the clutter and get you research insights.
Master the market sentiment during the most active trading hour of the day.
Get exceptional winning strategies from our technical analysts as well as expert views coming in from the market makers. Catch Markets at Noon every trading day only on ET Now.
Rakesh Junwala wants to go easy on trading. He does not want to trade as aggressively as he did, let's say, couple of years ago.
But I always used to, I have felt that for the last 25 years. कि क्या करो अभी छोड़ दो ट्रेडिंग में वो छुट्टी नहीं.
Once a trader, always a trader.